A new study by the Office of Financial Research suggesting that traders and corporations have been borrowing too much money to buy stocks and that it could all come crashing down. Is it a fair assessment? Let's bring back our panel. Rob, it is true that the latest numbers we have, this is from the third quarter of 2014, show that margin debt has reached $500 billion. That is a record. It's 2% of the overall market capitalization. So are traders borrowing too much? Not only traders, but also corporations borrowing too much money to buy stocks right now?
Why would they not, where interest rates being where they are? I mean, it's a stock buyer's paradise, so they're taking advantage of it. Whether or not that translates to the stock market being overpriced or not is a whole different issue. I think that inaccurately, bears have been saying that this stock market bull market's been over now for 6 straight years, right, and they've been wrong. So I don't think that necessarily translates into the market. Well,
you're right, but Adam, remember what happened with the so-called Great Recession. People borrowed too much money to buy assets that everybody thought were going to continue to go up. When they stopped going up, everybody was caught flat-footed, and it was much worse because of all that.
Yeah, but it was also precipitated by the fraudulent ratings from the ratings agencies. That's a whole other issue. The issue that we're talking about right now, yes, companies have been borrowing very cheaply to buy stock to return money to shareholders. That's not necessarily a bad thing. But there is some concern, those who've been borrowing to play, to invest and take risk and gamble. That's a whole different story, which could come down upon their heads.
It is. But Sabrina, I've got to tell you, just like what happened with the subprimes, if all the leverage that has been used to buy these stocks, if the stocks go down in values, suddenly everybody's stuck with this debt that they have to pay back. That could really hurt the financial system. Maybe not as bad as 2008, but maybe it is.
Well, look, David, I think that the thing is that the economic recovery is still fragile, so we're all trying to sort of try to predict when is this bull market going to turn into a bear market. But I think we have to remember and step back a moment and say that these kind of crashes don't just happen out of thin air, right? It's when new information reaches investors. So we have to ask, what is that new information? Is it going to be bad political policies down here in Washington? Is it something else? I feel sort of optimistic because there's a lot of gridlock right now.
Yeah.
I don't think it's going to happen overnight.
Yeah, go ahead quickly, Adam.
Just keep in mind, I mean, some of the companies that have been borrowing at cheap rates to buy back shares, Apple. So,
well, Apple's in a class by itself. We don't worry about Apple. In fact, Cheryl's going to be talking about somebody that's trying to compete with Apple, if you can imagine, in just a moment. Gang, thank you very much. Great to see you all. Cheryl, over to you. Rob, Adam, Sabrina.